trend signal for a review of the data and events the week beginning the 23rd of April. Monday morning, despite positive news, North Korea and news that the US and China were going to meet to find a solution to the simmering trade dispute, doesn't seem to have lifted markets that much. European markets seem to have opened in the same mood. Perhaps like me, the markets don't want to discount much just yet. North Korea, I guess, could be playing a very clever game, which is very possible. And the likelihood that China will agree to the demands of Trump seems, well, at this stage, a little remote, but you never know with Trump, of course. He could be playing a very clever game as well. Equities moved higher, moderately higher last week, as signs that the global macro boiling points were calming somewhat. The upcoming meeting between Trump and Kim Jong-un providing some optimism, North Korea and a resolution on its nuclear program. But equities still seem focused on tech shares, certainly in the US, which continue to struggle. The Nasdaq on Friday actually falling 1.3% as concerns mount about the demand for smartphones, with Apple over a couple of days, Thursday, Friday, I think, falling 6.5%. So not great, really. The dollar generally holding steady. The euro slipping a little bit on concerns about slowing Eurozone growth and what the European Central Bank is going to say this week at their monthly policy meeting. Sterling, well, this time it was Mark Carney, the governor of the Bank of England. The currency fell sharply last week when Mark Carney implied that a rate rise was not a foregone conclusion. Softer data, weather issues, Brexit, I think we're all thrown into the melting pot. It sort of contradicts previous comments from him and from other members of the MPC, but maybe things have changed. But the MPC, their mandate is to manage inflation, and they tend not to react to short-term events. But obviously inflation has dipped more than expected, and maybe it's going to affect their view. But they tend to take a long-term view, trying to predict what inflation is going to be in the next 2 to 3 years, rather than what it actually is in the current period. But anyway, we're going to have to wait until the 10th of May, I believe, which is when the MPC meet next, and for them to let us know their decision. Right. OPEC and oil. Trump waded in on the oil market last week. His intervention caused quite a ripple last Friday, certainly Friday morning, but prices seem to have recovered largely. What is odd is that Trump said that prices have been driven up artificially by OPEC. What he meant by artificially is that OPEC controls supplies, and by restricting those supplies, even when there is a lot of oil around, as Trump said, prices will go up. But that's what they do. They're a cartel. They manipulate prices. There's nothing new there. It just seems that Trump now has got oil in his sights as well. But of course, that has been helping the shale oil business. But apparently, the rates of fracking, new fracking, have slowed recently, despite the oil price. So, maybe that's part of his plan to try just to prevent the oil price rising further. I think effectively Trump is telling OPEC not to allow crude to rise much more. And the question is, how many fires can Trump light? It seems he can light loads and just watch them burn, occasionally tweeting about them to prevent them going out. Let's have a look at the data and events this week. Not much data, really. Loads of Q1 results from the US companies, 200 due out this week. Optimism still abounds, really. We've already had bits of data out this week on Monday morning, which is the manufacturing PMI data out in the Eurozone, which curiously is listed as medium impact by Forex Factory, so we have to change the filter a little bit. But you can see the data from France slightly better than expected on the services side, but the German manufacturing and services sector beating consensus, which is positive, although the markets seem largely unmoved. IHS Markit, who published the data, said that whilst the numbers were an improvement, there was less optimism among businesses towards the outlook for activity in the year ahead, amid a further slowdown in new order growth. So, it's not plain sailing, really. I think with the IFO Business Climate survey out tomorrow as well, it'll be quite interesting scrutinising that ahead of the ECB meeting on Thursday. Okay, just back to the high impact numbers, because if we don't remove that filter, we have far too many bits of data to even consider. So Tuesday, the Conference Board Consumer Confidence reading in the United States, a pullback in reading as equities seem to show a bit of polarization and diverging signs. Maybe that's affecting the consumer a little bit, but still very strong readings there. US crude stocks on Wednesday, expecting another small pullback, reduction in stocks. More fuel for the fire, possibly. Thursday, the ECB monthly policy meeting, the European Central Bank, the rate-setting committee of the central bank meeting, when interest rates are expected to be kept on hold. The question is, will the ECB take note of the slowdown in growth this year and comment publicly about it? I'm sure they will. The market wants to know what's going to happen to QE in September when it's planned to expire. The feeling is that that's not going to happen this meeting round, that we're going to have to wait until July when the ECB are expected to provide an update. The usual sensitivities to the meeting, the Eurozone equities, bonds, and the euro will also all take note. US durable goods on Thursday afternoon. Pullback from last month's revised number. Nothing more to add really there. On Friday, we have the second major central bank policy meeting. Bank of Japan, no change again, as it has been for such a long time. The Bank of Japan determined to reflate their economy with sort of mixed success. And then we have the two important backward-looking readings on the performance of the UK and the US, the gross domestic product, the value of goods and services produced in a country. We start with the first reading for Q1, that's the first quarter this year, Jan, Feb, March. This is one of three readings produced, and the first reading is plus 0.3%, the consensus, but I suspect the cold weather in Q1 will have taken its toll, and this number could actually be worse than plus 0.3%, some calling for plus 0.2%. US GDP data, their first reading called the advance rather than prelim. It is the one before prelim, which is odd, bearing in mind what prelim means. Expecting a reading of 2% down from the Q4 reading, which eventually was revised up to 2.9%, a particularly strong reading. And finally, Bank of England Governor Mark Carney speaking. Oh no, I hear you say. Me too. What will he say next? And finally, obviously, as we said, Friday, that's when Trump is scheduled to meet Kim Jong-un, the North Korean leader. Now, that could be interesting. We will know what has happened by the time the US markets open on Friday afternoon. So depending on whether this global macro event is not going to be put to bed, i.e. There is no resolution, and maybe Trump walks out like he said he would do if he wasn't getting anywhere. That would be interesting. That's it. Thank you very much for listening. All the best.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.